over half of both manufacturers and service firms say that they raised prices within a month of experiencing tariff-related cost increases. Many even did it within a week or a day. Joining me now on set to help us understand the pulse of small businesses, we've got Mark Valentino, who is the Citizens President and Head of Business Banking. Great to have you back here in studio with us.
Thanks, Brad. Great to be here.
So let's talk about this. What is the pulse right now of small businesses and how they're really weathering through what they can pass on to consumers versus what they can incur themselves?
So I think they're trying really hard to limit the amount that they pass on to consumers, but it's obviously, there's a cap to that because the costs are coming in so fast and furious. They obviously want to stay close to their customers right now, and at some point, if they raise prices too high, their customers aren't able to afford their products or services anymore. And then they run into larger companies that might be able to keep costs fixed to get more market share right now. So it's a very big concern for small business owners. I've actually, in meeting with some of our customers, I found some really creative solutions. Some of our customers are actually negotiating directly with their vendors overseas to say, hey, this isn't good for your business either.
Really?
Because you are going to see a slowdown in your US sales, and so help us by helping you. And so they're actually negotiating like a 50-50 split in the tariff price increase so that it gets absorbed a little bit on both sides and ultimately doesn't slow down necessarily purchasing happening over here in the US. So big concern though.
That's interesting, and it highlights the fact that it's easier for them to go back and negotiate with existing partners than it is to try and drum up entirely new partnerships and look at their supply chain and figure out how differently they would need to source if they did kind of uplift or uproot some of those existing relationships right now.
Yeah, we're seeing them do both. You absolutely have to keep your options open right now as a small business in the US who purchases goods from overseas. So whether you look for domestic options to purchase goods or you find new partners overseas, you have to kind of explore all options. But your best option is always to try to negotiate with your current partners because they're going through the same pain that you're going through.
We were speaking yesterday with ADP's chief economist, Naylor Richardson, who was highlighting within the most recent private payrolls print, which came in well below expectations, the pressure that small businesses are seeing on the labor side. What are you hearing?
I am glad you brought that topic up, Brad, because all we talk about right now is tariffs. The number one pain point for US small business owners is actually labor. It's actually the labor market, and it's actually how wage pressure has gone up, even through COVID and all the way to now. And so we're not talking enough about the stress on the labor market, whether it's due to immigration policy or just a constrained labor force in the US in general. We absolutely have to find ways to create more people entering the job markets right now, and it's especially critical for small business owners who perhaps don't have as much technology to fill those gaps as larger companies might have.
And within that, it's the price paid, the wages that they're talking with potential employees about. It's also, and you touched on this a little bit, within the immigration and the broader crackdown that we're seeing as well, you've got employees that are afraid to show up to certain workplaces as well right now.
Absolutely, that's all happening, it's all true. I think as an administration, as a country, we need to figure out how to create legalized immigration to create more jobs in this country. I think it's something that this country has always been built upon, was having a healthy immigration market to come in and fulfill jobs in this country. And so I think it's something that we as a country and as a society absolutely need to solve for, because to your point, there's a lot of fear out there right now. If you are an immigrant in this country, legal or illegal, if you show up for work, something bad might happen, and it's certainly having an effect on business ownership and business operations.
Something else that's under the radar right now, and I'm glad that we get to talk about this, is the number of small business owners out there that just don't have a succession plan.
Yeah.
And a lot of small businesses, we know, especially if it's a mom and pop shop, you rely on that next generation to really take the torch and say, okay, I know how to run the business. I know that this is something that our predecessors have put together to build generational wealth. What are those conversations like right now?
So, based on one of our partners that does a lot of broad-based customer surveys, 42% of small business owners are going to need succession in the next 5 years based on the aging out of business ownership with baby boomers. So an amazing statistic. 4 in every 10 businesses are going to pass hands in the next 5 years. We've been really investing in wealth management at Citizens. And as part of our small business kind of proposition to customers, one of the things that we're doing is trying to get more of our customers in front of our planning process from a wealth standpoint. A lot of small business owners think, oh, I'm not wealthy, maybe my business is worth something, but I don't have a lot of cash, this is not for me. It's the planning process that's important from a business ownership standpoint. Are you doing things tax efficiently? Do you have a plan in place? Who are you going to hand your business over to, and how? Because the how is actually quite an extensive process of passing on the torch. It's not just like, here's the keys to the company, see you later.
Yeah.
And so there's a lot of planning, and it's actually 3 to 5 years of planning in most cases that needs to go in. Do you have an employee today that you think could take on the torch if you want to pass it on? Is it a family member? Or do you need to sell the company? And if you do need to sell the company, you are going to get a much better valuation if you plan for that a couple years in advance than waiting to the moment in which you need to sell. Or I would even say worst case, because we see this happen as well with customers, a health event occurs to the primary business operator, and what that business could have done from a succession plan is no longer feasible, and there was no plan in place.
That's a really good point. Mark, always a pleasure to speak with you.
Thanks, Brad.
One of the best ballparks, I will say, in the MLB as well, Citizens Bank Park.
Thank you very much. Glad to be here.
Likewise.